with chaos at the New York Stock Exchange.
Get back in there at once and sell, sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, July 10th, 2026. Some shout outs to John, Jose, Carl. Some big birthday shout outs to Landon and Sherry. Hope you have awesome birthdays. And thanks everybody for tuning in week in, week out. We do appreciate it. So what's going on with the markets? I will tell you. Kind of a mixed bag this week, but a little bit more constructive overall. Dow Jones down 0.5% this week. S&P 500 up 1.2% this week, so a pretty strong rebound there. The NASDAQ composite, a lot of your tech stocks in that, up 1.7%, so also pretty strong rebound. And the Russell Small Cap Index, which has been leading the way for the year, down 0.6% on the week, but still up nicely year to date. Looking at some other things, volatility index down 7% this week, down to a 15 on the VIX. So getting down to some real complacent territory there. Long-term bonds, man, as measured by the TLT, they just can't get out of their own way. They're down 1.2% on the week. They're now down 3% on the year. Long-term yields continue to go higher because the market thinks that inflation is sticky. And therefore, long-term yields continue to go higher. I think the market is not expecting the Fed to cut at all. Not at all. If anything, the market is pricing in a Fed hike. I think that would be a big shock. I don't expect that to happen, at least not anytime soon. But one of the big pieces of news this week was that the Fed minutes came out from the first meeting with Kevin Warsh at the helm there. And the Fed minutes showed a very divided committee, 9-8 for a rate hike. Now, things have changed a lot since then. Oil's come down big time since we had an agreement with Iran. And it's still pretty tame, even after this week. We'll talk more about that in a moment. But the point is, the minutes came out. It indicates a pretty divided Fed. And I think the market is pricing in maybe some Fed pain. I think it'd be a real shock. I don't think the Fed's going to do anything at the moment. I think they're going to hold tight and not do anything at all. And then gold and silver kind of riding the coattails of what's plaguing the bond market. Gold down 0.3% this week. Silver down 1.9%. But I've got my eyes on gold. I'm really looking to maybe dip our toes back into the gold space. We did very well with that from 2022 till the fall of this past year, 2025, in which we exited at that time because it felt like gold was really ahead of itself. But now this big correction that it's had, I mean, it's down 5% on the year. I think it's starting to look pretty attractive. So I'm watching that and just kind of examining that whole space for maybe the best opportunity there. When you take a look at the sectors, really strange kind of week. You had energy up 3.5%. And why was that up? Iran. So the memorandum of understanding kind of got kicked to the curb this week. The ceasefire came to an end. Missiles started flying. They were shooting at ships in the Strait of Hormuz. We were shooting at all their stuff. They were shooting at bases and things like that around the Middle East. It all just got ugly again. But at the same time, the narrative continues to be promoted that we're still talking. So the market actually handled it in stride pretty well. Initially, there's some major volatility there, but it actually calmed down quite a bit towards the end of the week, and so did the price of oil. So kind of surprising to see that, but it did still push energy higher for the week, up 3.5%. And then the other winner for this week is tech, up 2.9%. Odd bedfellows there for energy and tech both doing so well at the same time. You just normally don't see that, but we saw it this week. Semiconductors up about 3%, helping push tech higher. And then the rest of the sectors were all pretty lousy. I mean, financials were flat. Healthcare was down 1.7. Staples were down 1. Industrials and materials were both down. Everything was down except for tech and energy. So kind of an odd week when it comes to sectors and the action there. I'll also say this. this action that we're seeing in the tech sector and the semiconductors particularly, it is just wicked. I mean, wow. The volatility that's taking place under the surface, it just doesn't look healthy to me. I mean, we're seeing these huge indices moving 4 to 5%, these gigantic sectors, 4 to 5% in a single day. Those are huge moves. It's tons of money moving there and very, very violently. I don't like the look of that. It just doesn't speak to a very healthy movement there under the surface in the market. So we'll be watching these things moving forward. Look, July historically is a good month. It's usually one of the strongest months of the year. Everybody knows it. Right now, it's off to a pretty good start. It's hanging in there. The S&P is up 1% on the month. So maybe it will hold tight here for the next couple of weeks. But we're entering into this period of time, August, September, October, leading into that midterm election. And look, I don't think the market's really shown itself fully yet. And usually when we're heading into these midterm elections, the market tends to act up. So I think there's a high probability that it could do so. Earnings are going to start in full force next week. We'll start getting a lot more information. And I will tell you this. If anything is off on these reports, the market is going to punish them badly. We've already seen it happen on a couple of other instances. Companies can have a rock star quarter. They can knock the cover off the ball, beat on earnings, beat on the top line, beat on the bottom line. But if there is anything off in the projections, the expectations moving forward, and their comments on demand, anything at all, you will see stocks get decimated on forward outlooks because if they're not right, the market has been punishing them pretty badly. So it could lead to some volatility. We'll see how things play out with all of that. What we're doing, we're trimming still. So actually today, I trimmed Shark Ninja. You know, that's the company that makes the Shark vacuum cleaners, Ninja blenders. My favorite, the Ninja Creamy. Man, that ice cream is good. I just love that so much. Anyway, we bought this stock during the tariff tantrum in April 7th of last year for $69. Add a little bit more to it in October, and we trimmed it back today. Still held on to it. I think it's a great company, a great CEO. But listen, when you look at the history of this company, when it's gotten up to this level, this valuation in the past, this price to earnings valuation, it has tended to sell off afterwards. So I felt it was wise to take the profit off the table. Did that today, sold it around $152. So pleased with that. And then we added some money to our managed futures strategy. It's drifted quite a bit lower here with oil pulling back. Remember, that was a strategy that kept us up and above the market when it got hit so badly when the war in Iran broke out. It was a really big impact to our models. And with oil coming down, the strategy's drifted a little bit lower. So it took us an opportunity to add some more to that as well, just to button things up because I don't trust the environment. I just don't. This volatility is happening within the tech space is really ridiculous. And I just don't have a full level of confidence in the market. I do think that July can kind of hang in there and we can probably finish to the upside here for July. But, you know, intermediate term indicators, the technical indicators don't look so hot. And it just would not surprise me in the slightest to see this market give up a little bit August into September, October. And we're prepared for that. You know, we've got some money sitting on the side ready to buy. For all of you new folks that have added money or brought money into the firm here in the last few weeks, we did add to some laggard areas of the portfolios this week. So things like bonds, things that are down a little bit, some of the stocks that have been down a little bit, been adding to those. But the high flyers, things like AMD, right, we've been kind of staying away from that until we get a little bit better entry point because I just think that these stocks are a little bit ahead of themselves on the growth side of things. So right now, that's what's going on. Look, things are going to heat up next week with earnings. Economic activity's been mixed. Pretty good overall, but it has definitely been mixed. Nothing to really get too excited about. I think the big thing is going to be earnings and the market's reaction to it. I'll be watching all that real closely and reacting accordingly. So I'm going to go ahead and wrap up. Between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is establish your own chocolatier setup in your house, like my friend Bill, who makes his own chocolate. Maybe it is retire a little early, buy that second house or that Airbnb. Look, you know what your goals are. Don't just think about it. Think big. Think B-I-G. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth. President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.